Everybody, welcome to the morning market briefing. Thursday.
Today's Thursday.
Tough time on the days this week. Thursday, April 13th, 2023. Hope you're doing well out there. Decent amount of economic data coming in. We're going to start with PPI. Another look at the inflation picture. This data is hot off the press. Excluding food and energy. Where do we come in, Tom? Because I feel like that's probably.
So this is a bit of a surprise number, particularly since yesterday's number was a little stickier than anticipated. But the producer price index, which is the non-consumer side of inflation, was expected to stay flat. So 0.0 month over month change. It actually came in down 0.5%. On top of that, the total overall number was supposed to come in at 3%, down from 4.6. It actually came in at 2.7. And additionally, last month was actually revised up to 4.9. So that's an even bigger move from 4.9 to 2.7. I mean, that's basically producer price index got cut in half and is very close now to a number that the Fed would be happy with at 2%. So we're now under 3 on PPI, which is a huge drop. I mean, just massive. Inside the core, though, ex food and energy was flat. The expectation was for 3.4% on the core. And it did come in at 3.4. That's down from 4.4 last month, which has now been revised up to 4.8. So that's a 1.4% drop on the core as well. So we're starting to see quite a bit of movement on the PPI. And of course, if you think of the flow of goods, they're first produced and then they're consumed. So the producer price index is now significantly leading the consumer price index. I think there's a fair inference that can be drawn there that going forward, the CPI is perhaps going to drop as those produced goods coming in lower go to the consumer and are purchased again at a lower price. And so I think that's very positive. The front end of the curve is getting bought up quite a bit right now. The rest of the curve is roughly flat on bonds, but that would indicate that people are currently reassessing, at least at this moment, what's going to happen on the front of the curve, aka the Fed.
Pretty interesting too. I think if you think back to the ICR conference that you guys reported on, I think you're spot on in terms of thinking we may see CPI follow this trend. There was just such fatigue from management in terms of pushing through price increases. I think especially consumer-facing brands are ready to offer some relief. They want to offer some relief, but I think that trail is going to continue.
Yeah, I would definitely agree. We, after our Bolero trip, Andrew and I went over to Chewy's, and Chewy's in their presentation ICR was basically like, there will be no more price increases. We know where we stand on the ladder. We're basically the Tex-Mex version of Chili's, and we can't keep raising prices or we're going to be pricing ourselves out of the market. And I think that plays now because you're seeing everything come down on the producer side. They can basically maintain prices, and if anything, they may be able to cut prices towards the second half of the year should this trend continue.
Meanwhile, we did get initial jobless claims, an increase of 11,000 over last week, so up to 239,000. Again, just another splatter of data that seems to support some relief on the inflation picture, some slowing on the economy, which in an odd way is good news.
Yeah, I mean, you call it roughly 5% higher versus the previous week, ahead of expectations by 4,000 jobs. I think that number is going to continue to trend higher. People are still going to be switching. They're leaving their jobs and trying to get a better deal or getting fired or trying to find a job before this thing really locks up. But I think that number is going to continue to trend higher, which of course is what the Fed thinks. And we talked about that in the macro, that if the Fed's projections are correct on the unemployment picture by the end of the year, there's probably,
1%.
we're going to need at least, it's probably going to be at least 300 to 500,000 jobs for the rest of the year on a weekly basis to get that number. If you include switching and people getting rehired. But it's definitely going to get more bleak just based on the trends we're seeing.
In other areas, oil cuts expected, Mo.
So I think I touched on this just a bit last week, but the data came out on projecting how the oil markets are going to respond. And unfortunately, it looks like we're going to get a heavy supply deficit towards the back end of the year. About 2% of the total oil supply, about 2 billion barrels per day, and million barrels per day. Sorry. So I think this is interesting in the aspect that it won't help inflation out at all in any way, shape, or form. And that's kind of the tricky part, is will it spike back up in the back end of the year once we start really seeing the energy prices rise? Well, then you might see that pop in the PPI. So it's falling right now, but I think there's a, keep an eye on that at least.
Yeah. Yeah. I think that's the thing with all these, economic data points. It's not like the battle is won and the war is over. It's, we're going to continue to see these pockets. I think the benefit is we're at least seeing pockets now as opposed to just a ubiquitous ramp up. So hopefully not as big of an impact as we've seen in the past, but it certainly seems like we're headed for higher oil late in the year.
You rarely see inflation just go all the way back down without ever spiking back up. So I think we've been kind of lucky so far.
Delta Airlines reported earnings. EPS came in at 25 cents. Expectation was 29. Stock's actually up about 2%, a little more than that. What are people seeing? No.
Just the guidance was really good. They, Bastion came out and said that they're not going to expect any slowdown in growth. I mean, Q1's always kind of rough with airlines, considering it's not really heavy on travel. But like I said, the guidance is good. Q2 EPS is about $2 to $2.25 versus analyst estimates were only at 160. So it's significantly higher. They were able to reiterate full guide, and the guidance is significantly higher than where analysts are putting it at right now, about 6 billion roughly. So it's, if they can hit that target, that's pretty good, decent, top line for the year, and CapEx roughly in line, but their total guidance for full year is about $5 to $6 a share. So the stock's just up on the guidance. I mean, I don't think most of the airlines are going to have good first quarters anyways.
Yeah, you're not really hanging your hat on how did we do in Q1. I think you're spot on. The biggest thing is standing firm on that guidance. And I would argue that's probably a big theme we need to be looking at throughout this earnings season is what adjustments, if any, do we see to guidance? And where does it seem like there should be adjustments? I know we looked at a couple of retailers yesterday, just on the Blueprint terminal, where it feels like the expectation is wildly different than things like the credit card data.
Yeah.
Where can we be ahead of the curve and kind of anticipate some of these things, and what our management team's going to say?
I mean, that's the central focus here.
Given that we're headed theoretically into a recession, at least according to which we'll get into their minutes here in a second, they have every opportunity to sandbag here. You're like, hey, economic pictures coming down, our guidance is going to be X. We want to make sure, like, if anything, you'd set a low hurdle and beat it versus saying, hey, we've got a high hurdle, and not only that, we're going to do better, based on what we're seeing. And anecdotally, we booked a trip. One of my wife's cousins is getting married in Ireland in November, and we're like, we'll get way ahead of it. We'll get the tickets now, and I'll tell you what, they are not cheap. And so, that revenue number is probably pretty accurate, because it used to be, you could get over there a couple months out, you could probably spend $700-800 per ticket, and I can tell you it's definitely not that anymore.
Yeah, tough times for the old O'Reilly clan. They got to stop getting married.
Yeah, they're running out of O'Reillys. Yeah, unfortunately, there's a lot of females in this group of 47 cousins, and so
it's a real extinction problem.
Yeah.
Tom, we got the Fed minutes from the March meeting. What stood out to you? What are the big themes?
I mean, if you look at the charts from yesterday, about 2:00, we saw quite a fall off in the market. And the reason for that is essentially the Fed says we're headed into recession. The quote they gave was, given the assessment of the potential economic effects of the recent banking sector developments, the staff's projection at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. So the Fed is basically openly saying, we would rather put the market into recession over having inflation continue to run rampant. But I think that we're in a position now where I think they've overdone it. I think that we're with the banking collapse, with the way everything started to move now, they may actually be again, they're actually ahead of the 8 ball. If they continue to raise rates, I think this mild recession that they're talking about might actually be a little more sticky. If they're thinking, a mild recession, a transitory recession, unless they quickly change their policy, we're probably not going to be that way. And a clear indication of that is the current Atlanta Fed Q1 GDP number is 2.3%, but the full fiscal year projection for the Fed right now is 0.4. So if we get a growth of 2.3% in the first quarter, but the whole year is only going to be 0.4, that means we're probably going to have some zeros and some negatives coming our way, which is an indication of some potential choppiness in the economy. That being said, the Fed projections have not been real strong. I would continue to think that they're probably perhaps a little high on that number, but obviously the economy has remained strong and been stronger than they thought it would be. So now the question is, are they just going to run that into the ground?
Yeah, probably.
On top of that, one thing to note too is we had the 10-year auction yesterday and it went very poorly. I think there was some early release of this information ahead of time because it was questionably soft on the 10-year. We had a 2 bip tail. Rick Santelli gave it a D plus. I gave it a C flat, then gave it a C plus. So,
it always makes me nervous when Ben is more optimistic about something than you are.
Yeah. We always try to get our grades in before Santelli gets on CNBC and gives his grade. So I thought it was pretty weak. I didn't think it was terrible, but Rick Santelli seemed to think it was pretty bad.
Yeah. Amazon CEO Andy Jassy, great headline. Mo did the notes this morning. He's signaling for storm clouds for AWS.
Stole that from Jamie Dimon.
No,
Shared
no,
with
you
us
did
later.
this. You did this. What are we saying? What's he saying?
I mean, I think he's basically coming out and, the consensus is that we're seeing lower growth and lower spending across the board with consumers and, businesses in general. So with the problem with AWS is they're saying they're going to see short-term headwinds that are going to dampen growth rates. It's concerning considering AWS is the majority of Amazon's operating income. So, and furthermore, I think the analyst consensus is that growth is expected to slow for AWS at the bottom of this quarter.
Okay.
So the bottoms should be in this quarter, but I don't know the validity behind that if CEOs coming out and saying that they're expecting more softening in that. So I think this could extend further out. And I think that's a legitimate issue for Amazon right now at this point. I mean, that's the vast majority of their operating income. They have competition from Microsoft, from Apple in that space. And it doesn't look very pretty for Amazon right now.
Yeah, I'm with you. I mean, even if the expectations for this to bottom out this quarter, kind of hard to gel that with everything we're talking about economically.
I don't see how that bottoms out this quarter at all.
So could be tough times for Amazon over the next several quarters, I would argue.
Yeah.
We'll wrap it up there. Tom, what are you seeing with rates as we close it up?
So we're seeing a little bit of a inversion move. The front end is being bought up quite a bit. The back end is not. So it's an interesting piece here. I don't know exactly why this would be the formation we're seeing, which is buying on the front end. If you look at expectations, we're still at a 70% chance of a hike. So the question is the bond market right? Are we moving towards no hike? My expectation is no. The futures are saying no, but if you look at it this morning, the buying is all on the front end. So sort of an interesting.
I just continue to think we get another hike.
Yeah. I just, based on the minutes yesterday, I mean, it's pretty clear that there are plenty of people who thought they should have done 50 basis points. There were some who thought they should have paused altogether. But I think what's worrying is the groupthink aspect of it, which it was a unanimous vote for a 1/4 point hike. So those people who were exceptionally hawkish caved. Those people who were exceptionally dovish also caved, and they kind of just went, I don't know, we'll punt and we'll do it. A 25 basis point hike. I think that probably end up in that situation as well. Again, where it's rather than make even an informed decision where there's some dissenters and some people who are maybe a little more aggressive, it's just going to be like, we all agreed sort of that this is what we're going to do. And, I don't know. I think it's kind of a bad move that there wasn't anyone who was willing to stake their vote on a pause, even though, they've clearly felt that way based on the minutes.
I mean, if you're coming out and saying there's a mild recession, then you're doing a 1/4 point hike. You're forcibly doing causing a recession at that point.
Yeah, you're setting it in stone as opposed to writing it in pencil.
Yeah.
Interesting. Yeah. I mean, I agree. I mean, I just don't know how you could bet against it. We'll wrap it up there. We'll be back tomorrow morning at 8:30. Thanks, Mo, for jumping in. Great job on the notes. We'll talk to you guys in 23 hours and 45 minutes.